Hello everyone, this is Gracie here. In this video, we'll be discussing problem 3.6 from the chapter Process Costing. So the problem, the product of a manufacturing unit passes through two distinct processes. From the past experience, the incidence of wastage is ascertained as under process A 2%, process B 10%, which is your normal wastage. In each case, the percentage of wastage is computed on the number of units entering the process concerned. The sales realization of wastage in process A and B are rupees 25 per 100 units and rupees 50 per unit. Yes, so they have given here the normal wastage is given, which they have stated 2% and 10% for process A and for process B, and they have told this wastage is calculated based on the number of units entering the process. That is nothing but the inputs in units introduced, on that the percentage will be wastage will be calculated. They have given the realization value for the wastage, which they have stated process A is rupees 25 per 100 unit. That means for 100 units it is rupees 25. So you use this percentage on your units introduced, you get a certain amount. For that units, what will be the cost you will be calculating here. So you will have calculation on normal loss, and they have stated rupees 50 per 100 units respectively. The following information is obtained for the month of April 2004. 40,000 units of crude materials were introduced in process A at a cost of rupees 16,000. So they have given here number of units introduced for process A, which they have stated it is 40,000 units of crude material which was introduced in process A at a cost of rupees 16,000. So the cost is 16,000. Then they have given other materials, direct labor, direct expenses, both for process A and for process B. Then they have also given the output which they have stated, which is 39,000 units for process A, and for process B it is 36,500. Then apart from these information, which is nothing but till your direct expenses is your input items, the output what is given here, it will be in your output items in your process account, so which is 39,000 and 36,500. Then they have given a new information which is different from all the other problems what we have solved till now. So the finished product stock in units is 1st April they have given 6,000 and 5,000 respectively for process A and for process B. 30th April 5,000 and 8,000 respectively for process A and B. Then they have given value of stock per unit on 1st April. On 1st April for process A it is 1.20, for process B it is rupees 1.60. So they have given stock details here. They have given opening stock as well as finished stock details here, and they have given number of units. This is 6,000 and 5,000 and 5,000 and 8,000 is number of units. For those units, the value for the opening stock is given. So your opening stock is on 1st April. How much is it? 6,000 for process A and for process B it is 5,000. So they have given value for process A it is rupees 1.20. Then for process B they have given it is rupees 1.60. But they have not given for the closing stock. So we will be calculating that also here. Then they have stated stocks are valued and transferred to subsequent process at weighted average cost per prepare respective process account and stock account. So the problems what we have solved till now, we have only calculated or done process account, abnormal loss account, abnormal gain account, and normal loss account we have prepared. So in this problem they have given information about the stocks, and they have asked us to prepare stock account. And they have also asked us stocks are valued and transferred to subsequent process at weighted average cost. So what is weighted average cost is, so when you use this weighted average method, where the formula is like the cost of goods available for sale, or the number of goods which is introduced for manufacturing a product, or the cost which is spent for developing a product. Uh, so by number of units available for sale. So the cost which is spent for developing a product divided by number of units which is available for sale, which yields the weighted average cost per unit. So in this calculation, the cost of goods available for sale is the sum of beginning inventory and net purchases. We use this weighted average figure to assign a cost to both the ending inventory and the cost of goods. So what is the result of using this weighted average costing is that the recorded amount of the recorded amount of inventory or stock on hand represents the value somewhere between the oldest and newest units which is purchased into stock. So similarly, the cost of goods sold will reflect a cost somewhere between that of the oldest and newest units that were sold during the period. So here this weighted average for average cost will be helpful to value the stock. So as we know the opening stock units and the cost is given, we do not know what is the closing stock units, and we know the closing stock units but we don't know, we need to calculate the cost per unit for the closing stock. So they have clearly stated here stocks are valued and transferred to subsequent process at weighted average cost. So weighted average cost, as I told you, it will help you, or the net results what you get from this formula. This formula is total goods which is cost which is spent for developing the asset divided by number of units which were introduced or which is finished for sale. So by using the formula, it will give you a price where it is between, somewhere between the initial value to the end value. So it gives a exact or average price for setting up or bringing the cost per unit. That is why we use weighted average cost. So let us prepare your process account. So first is your process A account. So we will be taking the number of units introduced and the other direct expenses or the expenses which is used for developing the product in process A. So now here they have stated the units, uh, 40,000 units of crude material were introduced in process A at a cost of rupees 16,000. Yes, so 2 units introduced 40,000 at a cost of rupees 16,000. So what are the other inputs are other materials 16,000, direct labor 9,000, direct expense 8,200 will be considered. So where other materials, direct labor, direct expenses 16,000, 9,000 and 8,200 is considered. So your input, your expenses which is spent is being counted. So next you will be looking into whether your output column. In your output column you will be having normal loss and number of output units for that particular process. So in this problem they have given us a normal loss percentage which is 2% and 10%. For process A it is 2%. So your normal loss will be basically on the number of units introduced. So how much is your number of units introduced? 40,000. So normal loss percentage is how much? It is 2% as per the question. So as per the question it is 2% on the units introduced. So now units introduced is 40,000. 2% of that will give you 800. So 40,000 into 2% will give you 800. So how will we calculate the normal loss cost? So they have given the cost in the problem, but they have stated that the sale realization of wastage in process A and B are rupees 25 per 100 units. But what is the normal in this problem what they have stated in this line is for 100 units it is 25 for process A, but your normal wastage is 800 units as per the calculation. For 100 units if it is 25, then for 800 units how much is it? You will cross multiply. So how will you cross multiply is, so for 100 units it is 25 rupees, for 800 units how much is it? So the cross multiplication is, you will find out for 800 how much is it. So cross multiply both. So 800 into 25 divided by 100. So 800 into 25 divided by 100. This is your cross multiplication where it is for 100 units as per the question which states 20 rupees 25 per 100 units. So for 100 units it is 25. The normal loss units what we get for process A is 800 units. So how much is it is a question mark. So you will cross multiply. So when you cross multiply 800 into 25 divided by 100 into the missing item. So So the missing item will be the answer, where it is equal to 800 into 25 divided by 100 will give you 200. So rupees 200 for 800 units. So we will be taking that in your process account. So we will be taking that in your process account. So 800, the calculation is 200. The amount what you get is 200. Then we have the number of output units in the problem. So output units is stated in the problem, which is stated as the output for that particular process is 39,000. So we are taking by process A account 39,000. So 39,000 is taken. So now you will the output and normal loss is taken. So after taking your output and normal loss, we need to calculate. So your input units is 40,000. Your output units you will be taking considering 39,000 and 800. So 39,000 plus 800 will give you 39,800. So we have 200 rupees, 200 units difference, because your input units is 40,000. Your output number of units what you get is, for normal wastage you get 800. For the particular output, for that process the output what is made is 39,000, which is there in the question. So you have only 39,800. So if you compare, your input is more than your output. That means there is a loss. There is a loss. Whenever the input is more than your output, there is a loss in your output column. So that loss will be considered, will be told as abnormal wastage. So by abnormal wastage, how much is that loss? 40,000 minus 39,000 minus 800 will give you 200. So 200 is the difference. So normal wastage is 200. So now we'll use the formula to calculate what is the abnormal wastage. So the formula to calculate abnormal wastage, as you all know, the formula is cost per unit is equal to total cost minus value of normal loss divided by units introduced minus normal loss units. So top numerator will be the cost, the total cost minus normal cost, divided by number of units, that is units introduced minus normal loss units. For process A, the total cost is, for process A, the total cost is this, your input cost. So the total cost here is 16,000 plus 16,000 plus 9,000 plus 8,200 will give you 49,200. So this is your total cost minus normal loss value. So your normal wastage, the value for your normal wastage is rupees 200. So 49,200 minus 200 divided by number of units introduced. How much is your units introduced? 40,000. Then minus your normal loss units. How much is it? 800. So it is 49,200 minus 200 divided by 40,000 minus 800. That is what is explained in this slide. 49,200 minus 200 divided by 40,000 units introduced minus normal loss units 800 units. So you will get 49,000 divided by 39,200. So this will give you the cost per unit for your abnormal loss units. So it is rupees 1.25 per unit. So here you will be taking normal abnormal wastage, as you have calculated the abnormal wastage units, which is 200 into 1.25, which will give you 200 into 1.25, which will give you 250. So now the balancing figure will be the amount which is transferred to process B's account. So when you balance the amount 49,200 minus 200 minus 250, you will be getting 48,750. You knew the output units, the number of units which is transferred to the next process, or the output units for the process A, but the value will always be the balancing figure after you find out your abnormal loss value. So the balancing figure what you get is 48,750. So this goods which is transferred from process A will be received in process B's account. Before that, we need to prepare stock account. So the closing stock value, or the process at the end of the process A, the value number of units how much you get is 39,000, which is for 48,750. So now we will prepare process A's stock account. So preparing process A's stock account, they have given us opening stock, closing stock, and we also have certain stock in process A where the last output units is 39,000. So that is also the stock which is there in process A's account. So we will calculate what is the total stock which is present. As if they have given the information about the stock, we need to prepare the stock account to know what is the exact stock which is remaining in process A's account, and stock will be transferred to the next process. If no information about the opening stock or closing stock is given, then it is not necessary to prepare your process stock account. So in this they have given opening as well as closing, we will be preparing it. So for process A stock account, they have given us opening balance as well as the closing balance. So what is the opening balance of the stock is, for process A it is 1st April, it is, for process A it is 6,000. Then the closing stock for process A on 30th April is 5,000. So we will finish first for your process A. So opening stock is 6,000. That will be taken in your problem for process A stock account. Process A stock account, opening stock, to stock on 1st April at rupees 1.20, 6,000 units. How did you get rupees 1.20, which is there in the problem, which states that value of cost per unit on 1st April is, for process A is 1.20. So opening stock value is stated. So 6,000 into 1.20 will give you 7,200. Next we have stock from process A account. So buy transferred to process A stock account at rupees 1.25. So which is directly given here, or we have calculated 39,000 and the value is 48,750. So this is the input stock. Then we have your closing stock in the problem. The closing stock is the 5,000 on 30th April, it is 5,000, but the cost per value of stock per unit is not given. We will be calculating that. So buy stock on 30th April is at rupees 1.24 2433. How did we get that value is, so here we have stock valuation at weighted average cost and computed as follows. As in the question they have stated, stock is valued at weighted average method. So stock are valued or transferred to subsequent process at weighted average cost. I've explained you what is weighted average cost in the beginning of the video. So weighted average cost formula is total cost or the total input divided by, that is the cost which is spent for developing the product or finishing that process, that is the number of the cost which is incurred for producing that particular product divided by number of units. So here the cost is 55,950 divided by 45,000. So how did you get 55,950 and 45,000 is? So the total cost here for the process for that stock, the total cost of the stock is 7,200 and 48,750 divided by number of units, which is number of units which is produced. So what is the total cost of the stock? 55,950 divided by 45,000 will give you the average weighted average cost. So weighted average cost formula is total stock cost of the stock divided by number of units, so this weighted average formula is calculated here. 55,950, which is the value of your total stock, divided number of units is 45,000. So 55,950 divided by 45,000, 55,950 divided by 45,000 will give you 1.2433 per unit. So this is the value of your closing stock. Then we will put into the problem, buy stock on 30th April. The number of units which is given in the question is 5,000. So you can look into the question. On 30th April it is 5,000. So for that, cost per unit is also calculated by using weighted average cost method formula, which is 5,000 at rupees 1.2433. 5,000 into 1.24433 will give you 6,216. So we will be taking 62,216. So next, by now the balancing figures. So the total here is 45,000, but here you will have only 5,000. You have taken the closing stock. So the difference is the difference in the number of units is 40,000. Then the difference in the number of cost is 7,200 plus 48,750 will give you 55,950. Minus 6,216 will give you 49,734. So this is how this that by transfer to process B is your balancing figure. So usually when your process A's account, any balancing figure that is the amount which will be transferred to the next process. But as they have given us the opening stock and closing stock, we need to calculate the stock balance and then transfer to process B. So that is why we have prepared the process stock account by taking into consideration opening stock and the number of units which are there in process A's account and what is the closing stock for that process, and then by deducting that, after deducting the input with the output stock, the balance will be transferred to the next process, that is your process B. So the stock and value which is to be transferred to next process is 40,000 and 49,734. So now we will prepare your process B's account. So to prepare your process B's account, we will be taking first the output of process A stock account. So the output of process A stock account is 40,000 units and 49,734. So to process A account 40,000, the amount is 49,734. Now we will be taking into consideration all the other expenses. So all the other expenses are material, labor and direct expenses, 5,000, 8,000 and 1,750. So we are taking material, labor and other expenses as 5,000, 8,000 and 1,500. So we have taken your inputs. So process 49,734, 5,000, 8,000 and 1,500 is the total cost. Next we will be going to your output. So in your output usually it is the normal wastage. Then you will have the output units which is mentioned in the question. So then we will decide whether we will be getting abnormal gain or abnormal loss. So now we have finished in the input side. We have taken all the expenses and the number of units introduced. Then now we will be going to the output side. There we will calculate your normal wastage and we will find out abnormal or a loss or gain to be incurred. So your normal wastage is 10%. 10% on 10% for process B. So 10% for process B. So how much is the number of units introduced for that process? So number of units introduced for process B is 40,000. So 40,000 into 10% will give you 4,000. So now we will calculate what is the cost per unit. Same the way we did for process A, the same cross multiplication is applicable here. So this was a cross multiplication which was done for process A. So now we will be doing the cross multiplication for process B. For process B, the number of units what they have stated here is it is rupees 50 for per 100 units respectively. So in previous for process A it was 20 rupees 25 per 100 units. Here it is rupees 50 per 100 units. So for 100 units what is the cost? It is rupees 50. It is rupees 50. Then now we have got 10% on the number of units introduced. So 10%, so the number of units introduced for process B was, according to the process account what we are preparing, was 40,000. So for 40,000 into 10% will give you 40,000 into 10% will give you 4,000. So 4,000 units. So now we will cross multiply. So cross multiplication goes on like this, where for 100 units it is rupees 50. For 4,000 units, how much is it? So 4,000 into 50 divided by 100. So which will give you 2,000. So cost for 4,000 units, the realization amount is 2,000. So the realization amount is 2,000. So we have taken here 2,000. Next we have output units. In this problem the question gives you the output units, where for process B the output units is 36,500. So 36,500 is a units. So now we have input units 40,000, then we have normal units and the exact output units for that process, which is 36,500. So we will add up. For input there are 40,000 units, for output 36,500 plus 4,000 will give you 40,500. So if you look into here, in input you have 40,000, in output you are getting 40,500, where your output is more than your input. So what you exactly wanted, more than that your units are. So when it is more than that, you will be getting abnormal gain. So when your output is more than your input, then you will be getting your abnormal gain. Your output is more by 500 rupees, so that I'm sorry, 500 units, so that 500 units will be your abnormal gain. So it will be in your input side, because the difference is in your input side. So to abnormal gain 500 units. For that, to calculate the cost for that, or the amount for that abnormal gain, is similar formula what you use for your abnormal loss. So what is that formula is, cost per unit for abnormal gain or abnormal losses, total cost minus value of normal loss divided by units introduced minus the normal loss units. So for process B, total cost, what is the total cost for process B? The total cost is till 1500 you will calculate, that is the cost. So this abnormal gain we will be finding out now. So the total cost is still the expense what you spend. So till 500, 49,734, 49,734 plus 5,000 plus 8,000 plus 1,500 will give you 64,234. So the total cost minus normal waste, normal loss cost. How much is your normal loss cost? 2,000. So total cost, which is 64,234, minus normal loss cost, which is 2,000, divided by units introduced minus normal loss units. So how much is your units introduced? Just 40,000. 40,000 minus how much is your normal loss units? 4,000. So 40,000 minus 4,000 will give you 36,000. So 62,234 divided by 36,000 will give you 1.7287. So we will be taking 1 rupees 1.728 per unit. So this is your abnormal loss value. So here you have got your, for your abnormal gain or abnormal loss, the same formula. So the cost per unit for the abnormal gain is got, so which is 1.728. So for 1 unit it is 1.728. For 500 units, 1.728 into 500 will give you 864.36 you will be getting. Instead of, when you are doing your process account, please don't take the point, just take the number before the point. So you will be taking 864. 864. Now you have your total units. So the balance will always be, the balancing figure will always be the amount which will be transferred, or the number of units which will be transferred to your next process. So 49,734 plus 5,000 plus 8,000 plus 1,500 plus 864, you will be getting 65,098 minus 2,000, you will be getting the balancing figure, that is 63,098 rupees. So now we finished preparing your process B's account. You know that, you know the amount which is be transferred to process B stock account you have got, which is your balancing figure. Now we will be preparing your process B stock account. So your opening stock as per the question is, for process B is 5,000. So we will take two stock on 1st April 2000, I'm sorry, 1st April at rupees 1.60, which is 5,000. How did you get 1.60 is, which is stated in the question, value of stock per unit on 1st April is, for process B is 1.60. So 1.60. So 5,000 into 1.60 will give you 8,000. Next, what are the other units which you have produced? So other units is, from process B's account, the stock is 36,500. So to transfer of the process B's account, 36,500 units which you have produced from that particular process B, the amount is 63,098. Then in your output side, you will be taking your closing stock and you will check what is your balance. So have they have given the closing stock? Yes, they have given the closing stock, which is 8,000 units, but they have not given the cost per unit. So you will be calculating the cost per unit. So as the stock is valued on weighted average cost, the formula will be total cost spent divided by number of units introduced. So total cost of the stock is 8,000 plus 63,098, which will give you 71,098 divided by total number of units, so which is 41,500. So 71,098 divided by 41,500 will 71,098 divided by 41,500 will be 1.713 per unit. So this 1.713 per unit is your value of your closing stock. So closing stock value is how much, which is 8,000 into 1.71 1.713 will give you 13,705. 13,705. Then the balancing units is 5,000 plus 36,500, which is 41,500, minus is closing stock 8,000. Then the difference what you get is 33,500, and the difference in the amount column also is the same, 71,098, the total of your input minus the closing stock value 13,705, you will get 57,393. So the balancing figure is 71. Balancing figure what you get is 57,393. So 57,393 is the balancing figure what you will be getting for process B stock account. As this is the last process, the balancing figure will be by finished stock account. So thank you everyone. We will look into the next problem in your upcoming videos.